Hey guys, how's everybody doing? Let's look at the market. I've been gone. I haven't checked the market since my morning stream. Had a bad day. Anyone see the Rod interview with Jay? It was a good interview. I watched that, and then I've been dealing with this lawnmower stuff. All right. Well, the SPY dipped back into the gap ever so slightly, but I mean, what can you say? This market's strong. We were looking all last week when we were stuck at this high value node at 560. We were looking at 574, and I said, I bet they're aiming for that because it's the next high volume node up the chain. I wouldn't be surprised if they're ahead of themselves and if they settle back and check that high volume, at least touch it, and then maybe go the other way. Now they haven't yet, but and I wouldn't even be surprised if maybe they just kind of settled in here and started going sideways for a few days. We gapped up. We had a huge gap up. Went up 2 days in a row, got ahead of our point of control, that settled right back down to the most prominent close point of control. So I wouldn't be at all surprised to see us settle at 574 or maybe check 574 before we go higher. But so far that hasn't worked out. But like I've shown you guys, these gaps have given us other opportunities. This first gap right here, the market never got back in it. But then that was a pretty good sign the market may want to go up. And then we made a gap the very next day. The market got back in it. That was a chance to buy, and it gave you almost another chance right here. Then we made another small gap here, and it gave you 2 chances. And we'll have more chances. That maybe not anytime soon, or not as good of chances, but and it doesn't have to settle back. Well, so on the Qs, they went right to the area where the next high volume node is. For some reason, the SPY has kind of a weird node there at 574. The Qs have kind of a weird one at 502. Let's go back and see when that's from. That trading range was established in from Feb 27th. For a few days in February, we rotated around. For a few days. We rotate between 495 and 510, but then we fell out of that one. It gapped down, and rest is history. All right, let's put on the 200-day. Well, we showed this morning, but I want to show IWM again. IWM looks great in the shorter time frames. Boy, look at this big bullish gap. They gave you 1 chance, almost 2 chances. Anyway, it's easy to spot those things in hindsight. At the time when that's happening, I was probably thinking the market's going back down. I'm still thinking the market's going back down. Shows what I know. But what I was going to show is IWM is the weakest, especially in the daily time frame. So it could have the most upside left. Also, look, it's still well under its 200-day. The 200-day is this middle Bollinger Band, and whereas the other ones are well above it. Look at the Qs. The Qs just they gapped. Well, they touched their 200-day the other day. Friday they touched it and sold off. They touched it a couple of times. Looks like they touched the last Monday, Thursday, and Friday, and sold off. Wow, that's impressive. Anyway, we're back in the bull market as far as the Qs are concerned as of this morning. And we basically have been for a while, but you never get the official word until it's too late. And this could be a huge bull trap. Also, that's also the third possibility to figure. If we go back to 2022, when the market started selling off, it did the same thing. It went up back above the 200-day moving average twice during that time frame, stayed above there and faked people out, and then made a new low after that. I'm not saying that's what it's going to do, but we'll just follow the flow and the momentum, right? All right, let's see what else we should talk about. I finally got, it took me a half hour to get the Altiverse built. This is for some reason, I don't know why this computer will not work, but I finally tried it enough times where I got it. That's the Altiverse. That's how much everything's up. The average, or that's the Alti allocation. So right now they have 3% cash and 4% money market, I believe. Yeah, 4.6% money market. So they have quite a bit. But anyway, these are the allocations. So the biggest ones are what we got: MicroStrategies, Palantir, TQQQ, Tesla. Okay, this is the performance today. The average stock in ULTY is up 4.12. ULTY is up 4.04. I mean, look at TQQQ up 11%. And what's that triple leverage fund out? We should check and see how QUp is doing today. That's what else we need to put on the buffer report. Ethan, if you're watching this, and maybe you gave this to me, but that's what I was thinking of. I just want to put all these index-based ones for sure, like QUp and QDown on the buffer report. That's one thing. I'm trying to think if I got that fixed this morning. I think this was something else that was making me mad, because I think I did try to add some. I tried to add QUSA this morning. Here's my data section for it. Where's QUSA? I think I took it out because no, there it is, QUSA, and it says not available. So meaning it's not in the Google database yet. Let's switch it to QUp. There we go. QUp is beating triple leveraged. We need to put those two right next to each other now. Now watch this. Sorry, gosh darn it. Some people probably like KQQQ. No, I don't know anyone that has that. We should put them right next to each other. Oh no, I know it. Gosh darn it! Why am I so stupid? Don't answer that. It's a rhetorical question. Obviously, the underline for QUp is TQQQ. Basically, that's what we want to compare it to. Is triple. Right? Yeah. All right, so now we can switch. Sorry, I hope Howard's not watching, and I'm pretty sure he isn't. But I'm sure KQQQ is a great fund, Howard. I love you. Come on my show sometime soon. All right, QUp. Anyway, okay, so, but we need to put some more in here too. Anyway, I'll add that later. But now let's actually go to the buffer report and see where it is. There it is. QUp beating the index. KQQQ is doing well too. We left it in there. ZVOL. ZVOL's looking really good. We talked about that this morning. Well, there's only one person here, but 10% on SVOL. They're doing something leveraged. They've got to be doing something leveraged. I swear I found the prospectus. I talked about that this morning. Found the prospectus, and it's still the old prospectus. And somebody showed me the new prospectus. SPYT. All right. Well, anyway, the other ones look pretty average. T-SPY's looking good. ZVOL. Don't have any outperformance, really. Well, I don't have my Max. This spreadsheet's not working. I just want to look into this way. ULTY is up 2.6. GPTY is up 3.1. LFGY is up 2.3. GDXY is costing me 7%. Gosh darn it. Holy cow. Wow. All right. Everything else looks good. YQQQ's down, of course, but it's down a lot today. But that's what we would expect. Boy, that was really smart of me to up the allocation from 13 to 16 or 17, wasn't it? That was a brilliant move. Oh, well, at least I didn't put it 20. I still have way more longs than shorts. I should still make plenty of money on the upside. And if this is a bull fake, a bull trap, I'll be darn glad I did it. Oh, I didn't share the screen, did I? That's typical. That's typical. Anyway, I'm sorry about that. Very sorry about that. Anyway, you guys could see the screen now. Yeah, I do intend to be sharing the screen. Thank you, Michael. How are you guys doing? Yeah, I know it. So you didn't really miss anything because none of my technology's working. The Call It technology's a huge. All I did was I updated this spreadsheet while I was talking to you. But this is pretty neat. I mean, look at this. So I love the index buffer report, as you guys know. So now we have Q up on here, and I've compared it to triple leveraged Qs. So, and it's outperforming today. So we need to start monitoring that every day. And I need to put Q down and compare it to S triple Q. And I'll do that. I'll do that on my own time. But anyway, you can see, and this is all that I was showing when I was talking just now. I was talking about what was up, and it really, SVOL's, look, SVOL's up 10%, Q up's up 12%, triple leverage NASDAQ's up 11%. Those are the best funds out there right now. And ZVOL's up 4.5%. Well, anyway, all right. Well, that's really impressive. Everything else is performing, doing what we'd expect. We'd expect SPY-T to have a lot of upside today. We'd expect QDT especially to have a lot of upside, and SDTY. If you heard Jay talk on the morning show, he said he was disappointed that more people weren't trading SDTY, or because it's a pure option. You guys watched it. You guys saw what you saw, I'm sure. It's the most pure covered call strategy. And what he means is from a trading option broker perspective. That I don't think Rod's people are option bros primarily. They just want yield. But anyway, but what Jay's trying to get at is that it's traded real frequently. They've probably already covered and rolled a couple of times today. And Jay's saying, okay, we're beating the competition, or Jay's real proud of it. So I got in the stream and I said, XDT or SDTY is beating XDTE, because it is by a little bit. But then I checked the NASDAQ one. The NASDAQ's one stomping the Yomax version. So I just didn't mention anything. I was getting ready to type, and then I thought I better check it and make sure it's stomping too, and I'm glad I did. All right, SDTY. So I don't like S&P. Let's do NASDAQ. Well, I don't know though. S&P's pretty cool. But let's see here. Download intraday trades. And then this is a freaking pain also. Your office start. All right, so come on. All right, so, okay, so finish. Let's take a look at these trades real quick, why don't we? Oh, this is all the trades, so we didn't have to pick NASDAQ or whatever. It's for all three of them. So let's see what he's done so far. So they sold short 23 contracts. I'll show you guys a cool trick in a second. Anyway, they sold short 23 contracts for 11, covered at 8, and sold some more at 355. Okay, so it'd be more interesting if they had times on here or something. I've looked at trying to make content out of this before, but I need to know what delta was that when they said what prompted the roll decision. Was it a technical thing? I mean, it may just been a money thing. Maybe when they're able to pick up 20-30%, if they can capture the 20 or 30 and then roll out a little bit. That's probably all it was. If they can pick up 20, which is what they picked up on 11, you get 8. I'd say picked up 30% or something. As soon as they got that initial first hour, maybe, I don't know, but anyway, then they rolled to the 8,700 for $3 the 587. They rolled from 584 or 5080 50, 80, 40. Okay, I'm going to show you a cool trick, something I know about. How big is the AUM of SDTY? Well, I don't freaking know. But you know what we do know? So let's just assume Jay's 100% covered on this fund, which he is. All you have to do is look how many contracts are running and multiply it by the strike, 5084. And then I think we have to multiply that by 100. This one times this one. I didn't do it. This one, multiplied by times. Gosh, you got to be kidding me. It won't multiply it? 20, anyway, whatever that is how much, whatever that is times 100 is how much AUM there is. It's not even that big of a deal, but that's the way you figure that. We could do the same thing on the Qs too, but now this is something screwy because they're using micro contracts too. This one's probably too small. You realize they can't do partials probably because the fund's probably not big enough yet. Because let's just do one contract so we don't have to rely on a spreadsheet being able to multiply 23 times 5840. What spreadsheet cannot multiply 23 times 5840? I mean, that is freaking ridiculous. This times this. All right. And then multiply that by 100. That's how big that fund is. So 13 million. Anyway, on this one, it looks like they're doing the IndieX is a big contract. So they're doing 3 of those, but then they're doing 50 small contracts. Well, and the small contract is called an XND. Well, there's 100 XNDs and 1 IndieX. So they're actually doing 3.5 big contracts would be a way to look at it. So if we wanted to figure out this one, let's just do this. I love math. Math's one thing I can do. We'll do math here. My station's going shitty. I'll just change it to math station. 2890. Let's see, 2890. Boom. And then that's so they have 7, you add 2 zeros to that, so they have whatever that comes out to, 7 million. Yeah, 7 million. But then here's the way to check if you're right. Here's the way I think about it. I just know whatever one contract price is for stuff because I trade SPX sometimes. You have to know what the one contract price is. So it's 50. It's the strike price times 100. So it's 5840 times 100. One contract of SPX is 500. It's $500,000 worth of risk. You look at the price of IndieX, it's 20,000 or something, right? Yeah, 21,000. So you could do the same thing on there, but it's 2.1 million because it's 21,000 times 100. We could do the same thing with RDTY, but I don't care enough. But anyway, on RDTY, same thing. It looks like he sold the 211 strike for 8. Then it got down to about 5. They captured that and they rolled out to capture more potential upside if the market keeps moving up. Now the market didn't keep moving up. So in this case, if you looked at this mathematically or whatever, they'd probably been better off. If the market's trying to move back up now. So we'll see. We'll know at the end of the day if they make the right decision or not. That's the way it always is. But it's whatever. It's a decision. These funds are interesting, but I'm a bottom line guy, and I was disappointed. Check this out. All right, check this out. What was I going to show? Oh, yeah, QDTE and QDTY. I mean, now on the other versions, the S&P's ahead. So let's just look here. XDTE. It's a short time frame. Not that this matters, but I was just thinking that we should be stomping. We should absolutely be stomping that fund. But that's what I get for thinking. We haven't checked in a while. So, but also these were too new to check. So on this one, No way. This one's behind. I thought it was slightly in front. It is. It's slightly in front. Yeah, because it's down, but it's down less than the others. But you can see this is just since February. So the most impressive thing Jay's doing, and I don't know why he doesn't talk about it more, is the fact that Triple QY is so safe and everyone hates it. You know, the fact that it has a huge, humongous buffer. I'm just checking on the dogs. Anyway. All right, guys, what do you guys want to talk about? Let's look at some option trades, or let's look at some earnings trades or something. I gave a free one out this morning. It was really good. All right, so what happened to you, Mark? You bought some 580 puts earlier and immediately went up $1.50. It's because it knows. It's like it knows. So be glad you didn't also sell calls. Anyway, hey, Dan, thank you for being here. SPX put spread today. You want me to show it? Okay, that's fine. Like a hedge. How long of it? Are you looking for a hedge for the end of the week or something? Let's do this. I want to show you let's do this. I think this might be a trade in the SPY, and it might satisfy what SB was asking for as well. Okay, where did the dog go? Hang on. Trying to make sure the dog's all right. I guess the dog's all right. Maybe the dog. I mean, Jax is right here, but I was the big white dog, the big white boxer. I think he may have gone on a car ride. Let me look real quick. Yeah, I think he's on a car ride. Okay. Option strat. What I was looking at is let's play a little revert to mean. I don't show these kinds of trades much because they're boring, but let's get out a 30-minute chart and see if there's a shorter term opportunity on the SPY. But yeah, it's always a great time to hedge. The other day would have been a great time to hedge. I showed you guys a hedge that costs like $120 on Friday, and it's worthless by now. But if the market would have crashed, you would have loved it, and it's only $125. The rest of your portfolio ought to be killing it. This is how hedgers are supposed to work. They are supposed to lose money. I mean, or you know, I should say that. I don't know, but gosh, look at that. That is just a rip. It dipped right back into the freaking gap, and there's darn sure buyers there. They didn't even let him get hardly at all into the gap. Well, I was just going to look here. Okay, so we do have this 574 area on SPY. Let's just look. Let's do something on that. So let's just do something for the end of the week. And this would not be a bullish trade. It'd be more like a hedge, because this would be like if the market doesn't keep going up and actually goes down from here. So I just realized the Wi-Fi extender thing is inside, but it seems to be running well. So bear put spread. Okay, now we're going to get out the SPY. And this is where we target. We're targeting for 574. That's how I need to know how to target. Well, the short strike is always the target because it's max profit. If it goes to 574, I want this trade to be worth the most. I'm always telling you guys about visual representations. Yeah, you can look at this and you can divide the max loss and the debit real quick. But I always, this is the risk, red's the risk, and green's the profit. So I'm going to scoot it down to 573. We could do something like, let's try something else. I have a better idea. $200 risk. It goes out till Friday. You make money. You get your money back. You make $196. So you get most of your money back. All but $10 of your money back. So you break even another. Well, no, they actually make it. You get your money back plus 196, no matter how low it goes. Okay, but if it goes, if it goes to the 573 area, you make $500 or $600, depending on when it gets there and when you take it off. If you wait till, this day, whatever that is, $200 or $300. So let me see. I don't like that much risk though. $122 risk. I mean, that's because I'm just trying to aim for that one spot. If it does anything else, that's fine, because it's only $122. If it keeps going up, I have other stuff at SPY, right? My freaking retirement's in Vanguard. If it keeps going up, I'm fine. I mean, but anyway, but that's one way to aim for a spot. I love aiming for spots and using broken wing butterflies to aim for spots. And that's not that's not the most fun trade ever, but oh well. I'll share with you in case I want. But now I think somebody, SB, do you want a better bull put spread that hedges your portfolio or hedges some downside out a little bit? This is just this is like a fun trade to play a pullback for the end of the week. Copy link. But I'll do whatever you guys want. But I'm going to look at some of these because I showed you. Oh, you sold one today. Okay, perfect. You sold one today. Perfect. I get it now. I get it. You bought 100 more PLTY. So, okay, perfect. That was a great move. Okay. I was wondering, what does he want to do buying one? But I thought maybe you made so much freaking money the past couple of weeks, that you almost have too much money. I thought maybe you didn't have enough money to physically keep it all, so you're going to have to buy some put. I'm just joking. But anyway, I think the people that have been bullish have done really well lately, but there's nothing wrong with, remember, there's nothing wrong with protecting yourself a little bit too. Anyway, good job, SB. I appreciate it. Thanks for sharing that. Okay. So what's Mark saying about S? I want to get down on this situation. SDTY and QDT seem to be doing better than Round Hill. Yeah. I haven't looked at Round Hill. I was just comparing it with itself, with Jay's other funds, but no, you're right. I did compare that with Round Hill. I forgot. But my experience with weeklies is they have a negative. Well, those aren't weeklies though. They're dailies though, right? They do it, and they aren't even. They do dailies, but then they do them 2 or 3 times a day. That's actually day trading, and maybe that's what Jay meant. Jay was just kind of disappointed these don't have more AUM, and because I think what he's trying to say is I think they're taking more risk with these. They're trading actively. They're sticking their neck out there and trying to go for outperformance. So I'm sure it's driving them crazy that they're behind Round Hill, and it's probably some path dependency situation, and it happens. But or it could come down to Round Hill's traders are out trading them or have out traded them over this. It's only since February. So there's the dog. I think dog's back. I think the boxer's back. But I could start covering the daily trades on that. Jay was acting like he had his feelings hurt. People aren't covering it. Then someone in the comments said, I'll start covering it. And I could cover it too, but it's just not very, I don't know. I'll do whatever you guys want me to do. Yeah, I'm sorry I didn't share the screen. I'm just having kind of a rough day. If anyone saw my morning show, you probably know about it. I had to erase it after. As soon as I was done, I erased it. But there was 1 or 2 people that caught it live. God bless you guys. There's somebody that I never talked to before that caught it live. And then I was in a pissy mood. But then I got off and I realized the reason no one was there is because Rod was having an interview with Jay. And so anyone that'd be watching me is going to be watching the Rod, because it's on. They're talking about Misty also, for God's sake. Misty's the behemoth that, all of Rod's people love Misty. I don't know if we have any Misty people there. Misty's all right, but I like it in the sense of it's part of Alti and it's part of GPTY. It's part of other funds, of course, but it's not part of GPTY, but it's part of ULTY and it's part of LFGY. But yeah, so I was upset about that. But then right as soon as I erased it, I was in YouTube to erase it, and I see that Rod has a live stream on with. So then I was instantly in a little bit better mood because I figured, okay, well, anyone that wanted to be watching, they're just watching Rod. That's fine. So I get into Rod's live stream and I type hi or something, or I comment on something that's going on, and somebody comments right back, somebody I've never heard of, said, I really liked your content. Give me an unsolicited, within the first 10 seconds of being in the room. As soon as I signed in, somebody in the comments gave me an unsolicited comment anyway, or a compliment. I appreciate it. I was having a rough day. Oh well. All right, Mark, what do you think about Misty? So, proved to have decent return. Yeah. I mean, and I will too. I mean, I just kind of like the Defiance ones in that category, but I mean, now we have choices. I mean, and to be fair, I bought the Defiance one and then sold it. So as part of the model portfolio, I'd buy it again if we got back in a bull market. Guess what? We're back in a bull market today. Or I'm not saying buy it, but I will allocate more to risk, and that in part of that will be I'll probably take off some gold and maybe put on some QDTY. I wouldn't have a problem with that. I think I own SDTY, don't I? In the model portfolio. Yeah, I'm doing my part. I should have told that to Jay. Don't I own SDTY in the model portfolio? Or what do I own? No, I bought Granite shares. Yeah, that's right. All right. Well, the next one I bought that one from Will or whatever, YSpy. Well, let's look at YSpy. I mean, so let's see how that one's been doing. I'm just kind of waiting to see which one does better. So let's do YSpy and then SDTY. Hell yeah, I made the right decision. Hell yeah. Okay. Now, the trade-off is it looks like I'm getting all the dividends the same. Look, the dividends approximately half, right? 80 to 170, a little bit less than half. But the price is approximately half, right? And also look at the price, a little bit less than half. Anyway, they probably made this fund, honestly, because as leverage, they're probably trying to beat this fund. They're probably trying to do exactly what they're doing and pay the same yield. I wouldn't be at all surprised. YSpy, what did they also have? A YQQY, I think. Let's see here. YQQY. Let's compare that one with QDTY. YQQY. No, that one's not found. Anyway, but you guys, there's another one they have that's the sister of. It's not that interesting, really. Anyway, I just need to buy. I'm going to buy it and I guess I need to start thinking about doing this. If we stay over the 200-day, I need to reallocate. Yeah, it could almost be a good point. SB Trader. I mean. Yeah, yes. Whenever you're above the 200-day, you have a normal mean reverting market. And here's the other day. There's many different ways to determine it. Over the 200 days is kind of a common way to determine. It's probably not the most sophisticated way, probably not the most accurate way. You can also look at when volatility futures are in backwardation or contango. When volatility futures are jacked up, like they have been the past 3 or 4 months, that's a sign. Let's look at this. Let me show you. Let me try to demonstrate this one to you instead of just talking about them being jacked up. I think they chart them in here somewhere. It's just there's a jillion ways to chart this, but you can just chart the near month futures contract and subtract it from the further month back. And there's always a relationship. The near month should always be less expensive than the future months. And that's what's called a normal market. And those are the kind of markets that mean revert. And those are the kind of markets that generally happen over the 200-day moving average. But yeah, so it is a positive sign to get back towards what I would call a normal market. We're like we were in, for the past 2 years where it seems like everyone says, man, we go down like 3 days in a row. And then that's just, people get frustrated that are shorts during those times. And you hear them, I can't get anything on my puts, or I can't, the market won't go down. Well, that's a mean reverting market. It's because as soon as it drops, somebody buys it. Really, even though we aren't over the 200-day, we've had a mean reverting market too, in the sense that it's trying to mean revert to higher prices because we got too low. But, I'm trying to think, there is a way to show there's an index on here that has it. But here's just an easy way to do it, even if you don't have futures. Let me show you this. This is an easy way to do it. So you get in here and you type in VIX, and then you hit minus, and then you hit VIX, and then you take 3 month or 6 month, or you choose something in the future. Those are futures. You do like VIX, VIX 6M or VIX 3M, I believe is 3 month VIX. Okay, now that'll plot it, and it do it VIX minus VIX. Okay. And I did it, and do it the other way. Do it the other way. But this is one way to look at backwardation in contango. And we're using the cash index. It'd probably be more accurate to use the futures, but then you have to roll every month. You can't just go back and look at a continuous contract here. So what this shows you is whenever this is negative, I'm trying to find the zero line. The zero line is right here. Okay, so let me plot the zero line here. Zero to, I think if I just do shift, that's close. It's actually negative. It's close. It's -3. All right. Oh, I'm sorry. When we're below that, you guys remember when I didn't do earnings trades for a while? It's because I have no guts. True. But it's also because I don't mess with stuff when the market doesn't mean revert. These option selling strategies especially rely on the market to mean revert. So if you noticed here, when the market has been in backwardation, and I've given speeches on I've talked about this, it's no longer a tailwind. There's no longer a tailwind to owning options because everything's backwards. So you could say from Friday, April 4th, or when did it first go inverted? I mean, I guess it got inverted on Thursday the 3rd, but you could, but it was inverted earlier in the month too. We were inverted earlier in the month, and we bull trapped. We uninverted, and we had a rally there. You guys remember that? But when it's inverted, it's a warning sign that a crash could come. But yeah, when it's back above, so here's the good thing. It spends 2/3 of its time or 70% of its time above the line. So you can look here, all of 2025, when it's above the line, it doesn't mean the market can't crash. It still could crash. You just aren't as likely to get its mean reverting. So when it does sell off, it helps it from crashing. It doesn't mean it can't, but it helps it because as it does sell off, there's resting orders underneath there. And the reason is because the present is less volatile than the future. And that's the real reason for that. But as that is no longer the case, and the option traders decide, as option prices reprice and the future and the present gets more risky than the future, that's a bad sign. But because of that relationship, that gives owning options and owning convexity a tailwind. So I think they don't say this in books. People in books tell you never to buy options, but I think you have to buy options sometime. And I think that there's good times to buy options when you're underneath the if you're underneath the 200-day and you're inverted, how about just putting on a freaking, how about just owning some puts? I mean, just in case. And it sure worked well this time. You guys remember in August how I predicted the same thing would happen? I didn't tell you this but it was because the VIX inverted a few days before, and I saw some other stuff. We weren't under the 200-day but back in August, there was also stuff started the mid-July under the, let's just look. Anyway, August wasn't the best example, but it was also, that was just a feeling I had too. That one actually, the VIX curve was not inverted yet. But there's no doubt it gave us plenty of time that this means something's wrong with the market. Whenever this happens, it's not a healthy market. Healthy markets don't trade like that. So that's whenever it does happen, you're either trying to make a bottom or you're fixing to go a lot lower. So Do any of you guys use the VIX futures for? I figured. Okay. SB. So what are you saying? PLTY could easily have a 6. Yeah. PLTY is killing it. I mean, PLTY. Maybe I should just, if I was just concerned about views, maybe I should just start doing the PLTY and the MSTY trades every day. I mean, just make and start estimating I don't want to estimate their dividend because I hate that. I'd have to use spreadsheets and I don't want to step on Rod's toes. Plus, I wouldn't step on Rod's. But maybe I should focus it more. But the proliferation of these funds has just got me where I'm like, there's already plenty of funds out there. There's enough for any. I mean, we have enough funds out there that you can allocate practically any type of strategy. I'm not saying I'm against them coming out with more funds, but it's just too crazy. I just at some point I think it's just I don't know. At some point I just don't think you should review every fund that comes out. There's just 14 that come out every day, and anyway. I think what I'm trying to do is focus on the good ones, and the good ones are the ones that you guys talk about, like PLTY. The good ones aren't just the ones that I talk about. I'm not saying I know all the good ones. You guys know the good ones too, but we try to focus here on this channel, the ones that have more promise, more track record, maybe. I don't know. I focus on the ones that have the better option strategy. That's why I like ULTY and their in the collar strategy, and I like GPTY's put hedge. So sounds like you've been doing good in PLTR, Mark. Yeah. Boy, that's a heck of a month. Mark, what was your old job? Didn't you say you had like a regular person job before this? We were talking the other day and I forgot, or, just a regular job. But anyway, you're doing great. You're doing great. 24,000 a month is a lot of money. Or, I mean, if you can make that every month, then that's the hard thing. That's the hard thing, but keep it up. I'm with you, Mark. I'm for you 100%. 100%. All right, guys. Well, I guess we talked long enough. It's 12:43. If you want newspaper, okay, yeah. One of my friends' dads was he was an assistant editor, but anyway, he did he worked at the paper his whole life, had a great career there. But I would think the paper business is like going out of business. There's not any. Is that going to be around in another 25 years? I don't know. I mean, it seems to me like it may be going the way of the bowling alleys. I was talking to my neighbor this morning she was saying, why don't we have any? Oh, she was saying there's just no new movies that come out anymore. There's nothing good on at the movie. And I go, yeah, because it's on your TV, right? It's because it's because they've disrupted the model or whatever. Yeah. The newspaper business. Yeah. I mean, print media. I'm trying to start another. It's funny you should say this. I was going to start another YouTube station that I think will do way better than this one. I'm still going to do this one, but I'm trying to start another one to save this one or to support this one, to pay for live charts and stuff. But I'm hoping between the two of them, I can make a self-supporting media company or whatever. Well, anyway, so I got down to do the actual concept I was working on this weekend, and I realized it's better fit for a web page. Some ideas are, I'll do YouTube videos too, but my concept, I'm going to have to, so anyway, I'm going to take one more week to work on it. But anyway, this is the finance Twitter is fun because you can start a channel like Rod did with your phone in a spreadsheet. And that is cool. But this other thing I wanted to do is more involved and more artistic. And I know a lot about it, and I think I think it'll be a hit. But anyway, I'm going to be working on that this week. So I appreciated SB. Yeah. I mean, and I learned from SB too. It's not like, and there's another BR. BR and SB both do really good trades. And I've learned and Scramble Everything. That guy's a good trader. A lot of guys when I say good trader, my definition of a good trader is somebody that does a spread and somebody that knows about spreads and is selling premium selling shorts to pay for so that's why I'm down with it. Because they trade in my style. But other people in my room do too. there's a jillion different ways to trade. I mean, it just is important to try to work selling premium in somehow, but it's not the be all and end all. I'm telling you, whenever the curve inverts, take a few shots because you don't get the decay in the option. The options do the opposite of decay because volatility is going up. Some people just buy a straddle as soon as the yield curve gets inverted. It doesn't matter which way it goes. You have a tailwind. Okay. I could go back and test that. That might be an interesting video. Just go back and test if you bought a straddle on the first day of an inversion, held it a week. Maybe I'll go back on Tasty Trade and do that or something. But I mean, that's the kind of stuff I'm more fascinated with is the inner workings of the volatility and the options and stuff. So, all right, guys. Well, I appreciate you being here. ASB, thank you for the compliment. And like I say, I've learned a lot from you too. Look, real quick, or not real quick. I like to look at this. If you guys can be excused if you have to go, but let's check out some of these trades. Okay, so on this SB, I made a suggestion for SB. My suggestions for SB always lose. Oh, but they didn't this time. Okay, I was proud. Now, an SB doesn't have to do. I guess SB and I were talking. He was a little bit scared about maybe PLTR making a pullback. Everyone's done real well in PLTR, but if it pulls back, it could hurt existing positions. Let's just say. So I suggested this. It goes out to June 6th. You get a yield. You can take your wife to dinner. You get $172 right off the bat. Maybe not to dinner. I mean, I don't know, but it's not a whole lot of money. It's not a huge yield, but it's only on $528 risk. You do it twice. Do it twice. And what this is, it's a 3-leg risk reversal, but it's the opposite. We're selling calls to pay for puts. Everyone knows that it's ridiculous and risky to sell a naked call. So we aren't going to do that. We're going to sell a call spread. Now here's a naked call. Naked margin on a naked call is 1.9 million, but you make $574 yield. But if you do it like I showed SB, then you knock off a bunch of that potential loss. But you only get the $172 instead of the $500. But what I was thinking here is if PLTR does pull back, or something, this could be a good hedge for a portfolio too. I mean, God forbid. But let's say this is a bull trap, and then one day we come in and Chairman Xi said that you never know. Something bad happens on a macro level or something. Then all of a sudden the Trump-related stocks sell off again. Anyway, so this could be a decent one to have on. But I like those types because that's a hedge, but you got a yield and you have a buffer. It has to go up more than the percentage thing doesn't work right now, but it has to go up more than about 4.5% to mess up this trade. That's between now and June 6th. And I know that's not a huge buffer, but anyway, that's a decent way to buffer something. All right, let's see what else I got here. Tell hedge for a week. This one's going to be a full loser, but like I said, you sleep at night. I'm just always worried because what I'll do is I'll roll something over the weekend. I'll take a profit, but I still need it to keep going up the next week or to at least not crash. And then I'll make even more money off whatever I'm generally doing on my, on my earnings trades or just on whatever. I probably waste so much money on those. I just waste so much money so I can sleep at night. So I'm not saying you have to do them. Sometimes I look really smart, like in August, and in April I cleaned up. But yeah, but then I'll blow it by August. I made a ton of money in August, but I blew it I didn't blow it, but I started I reverted to mean. My profit loss reverted back to the mean. So anyway, when it rains, it pours. Okay. I did want to show this AMAT trade. This thing, if somebody put this on, I did this on Friday. This was a monster. This is a monster synthetic. That's not actually really the trade yet. Let's go look at, I don't know why I showed somebody a synthetic, but actually the trade was on AMAT because they have earnings today. It's up 572 right now. Even though they haven't done earnings yet, take it off at 572. Well, you have a choice. You can leave it on, and at this point, it's moved so far, you have a 13% buffer. You leave it on until the end of the week. Granted, if you miss earnings, you're only going to make $140 because it's going to settle back to the credit. If you miss earnings and it goes to the left, and that's if it doesn't go so far to the left, it costs you, it turns it into a loser. I just take what I would do is take this off and put the same thing on again, and get this. Take it off and put on the same thing again. We'll do that on the afternoon show. But that's what I wanted to show to you. I wanted to show that AMAT trade. And then also, here's an earnings trade in JD I did on the morning show. This actually is a good one for a small account too. Let's freshen this one up a little bit, and then I'm going to share it with you guys in case anyone, they have earnings coming up. It doesn't have a huge buffer. JD's options are pretty liquid. I made a little bit less risk, save as new trade. Anyway, this might be a decent earnings trade. There's not a lot of there's not a lot of big tech stocks. So not a lot of super liquid stocks for earnings, but we do have some. JD was fairly liquid. I don't know SMR if that's liquid enough. I think I looked on the morning show and it wasn't. ON, I don't think it's liquid enough. This SE sometimes is liquid enough, but it's real expensive, isn't it? What's the SE trade at? No, that's not too expensive. Okay. Let's see if this one's worth doing. What does SE stand for? Let's see, sell put. We'll take this down here. Okay. There's a risk reversal right there, but a risk reversal, but not defined risk. I like a defined risk reversal. This put is selling for 105 IV. Bid at 610, asked it. What does that say? I can't, God, this red. Does that say, 625. Okay. I thought that said 825. I was like, that's a huge spread. 625. Okay. Well, let's do this. Okay. First, we start with the put spread. The put spread's the real driver of this. Really, we're just doing a put spread. We're just trying to fake out. We're trying to fake out fate. So when you do a put spread, oh my gosh, there's a squirrel. Where's Jackson? He doesn't see it. There is a squirrel right there, and Jackson is asleep. Man, Jackson would go get him. He's yellow too. See if you guys can see him right there. He's at the bottom of the staircase. Right there on the first step. I don't know if the camera's good enough. He's in the bright sunlight. Okay. But you're just trying to trick fate because fate doesn't know what to do with you because you have a put spread on. So fate wants to make the market be limit up just to make you just madder than, anything. Well, guess what, fate? We've got you by the short hairs because we're also in calls. You can't mess us up. The only way you can mess us up is by, crashing the stock's price. And that's not even going to mess us up too much because we have this 130 put. So just good luck with us, fate. $700 risk, $80 reward. Now let's see if this is a 16 delta, this call. So it means it's only going to help you 16% of the time, but that's all right. Anyway, if you're one of those people that doesn't believe that ever helps, that's fine. Do the same trade and exclude it. This is a good trade too. Make a credit, take your wife to dinner. You just don't get any upside, but there's nothing wrong with either of these trades. Just depends on which way you want to do it. All right, I'm going to share this, and then I really will get out of here this time. Thank you guys for being here. Here it is. Here it comes. Yeah, but synthetics are my jam. The whole idea of option trading is that's the whole idea. The whole idea is doing something with options that is less expensive than doing the same thing with stock. That's part one. And then part two is you do that with part one, and then you sell something that's overpriced, like a call. It could be a put too. And you do it at the same time. So long, short, right? All right, guys. I appreciate y'all for being here. Check out that trade if you want. I'll be back at the end of the day. I will talk to you later. Thank you so much for being here.